We have an important voice joining us. Peter Cardillo, who's Chief Market Economist at First Standard Financial Company, joins in with his perspective on the markets. And Peter, it continues to be volatile for global markets, but in particular, despite the mayhem that we witnessed at the start of this week and the flash crash and all of it, yields have not eased in a meaningful manner. They're still elevated at 2.85. We've been telling our viewers how 3% has always historically been a risky zone, a zone of risk off when it comes to other asset classes in the world. Do you think that, at 2.85, the concern on yields, rates, inflation still remains?
Yes, I think so. And, it was quite evident in today's market. At one point, the market was up. And then, of course, when yields backed up to the highs of last Friday, we saw the market actually go down. So I think that fear factor of higher yields is still very much in the marketplace. And, of course, sentiment has changed to the point where we have a lot of volatility. And while I believe that we probably made a market bottom on Monday, I do think that we're going to see very volatile sessions going forward. And by that I mean, you could see swings of maybe 1 or 2% from the higher to the lower end of the trading range of the day.
Right, but it's not going to get worse than that. It's not like we are going to be seeing a conclusive reversal of this strong bull market that we have been in over the last 10 years.
I don't think so. The fundamentals are very strong. And, if you look at the global economy, it's quite strong. So I don't think that it's the end of the bull market just yet. And I don't think that we've seen the highs. But I do think that we're entering a period of where higher yields and the prospects of higher inflation is going to cap the markets. As I said, I think you'll see more volatility along the way.
Peter, volatility coming is given because 2017 in a sense was an outlier in terms of market action, and equity as an asset class will see volatility. But Peter, volatility does not means risk. What I'm trying to understand from you is that what do you think is the risk to this market?
What do I think? I'm sorry, I didn't get the last part of the question.
What do you think is the risk to this market?
Well, the risk of this market obviously is if we should break the lows that we established on Friday. On Monday. Then that means we could find ourselves in a full-blown correction. But what would that risk be? Well, if we saw yields go much higher, if the 10-year would spike above 3% within a very short period of time, I think that would be the greatest risk to asset class right now.
Okay. Right, Peter, appreciate your time and glad you could join us.